This episode of Ladder Legacy is proudly sponsored by the Bedford Group Insurance, helping families and businesses protect what matters most. Whether it's coverage for your home, your family, your team, or your future, Bedford's got your back with the best reliable insurance solutions in Florida. Visit our website to learn more, bedfordinsurance.com. And now on to your episode. Hello, everybody. This is Rudy Romero from Ladder to Legacy. I'm here today with Frank Trimboli with CMG Home Loans. He's the all-in-one home loan specialist. And what that means is he's going to tell us today how his products, what he's done over the last few years has helped him help homeowners refinance, buy new homes. And, I won't steal his thunder, but I'll let him take it away from here. But he's been helping people. Frank, how are you doing today?
Good, Rudy. Thanks for having me on your show, man. I appreciate you.
Yeah, I'm happy to have you. I know we've been trying to connect on some items, and I think this is the perfect topic to start with is, you decided to jump into the mortgage industry, and you currently work with CMG. And tell me a little bit about what you have, what you do, and how you kind of got there.
So I'll give you a little quick background. I worked for a bank, SunTrust Now Truist, for 24 years. In the banking world's all I knew. The traditional banking world, and did well there. And I decided to step outside of the box. Didn't have to. Stepping out made life a little harder for first couple years, but reaping the benefits now just because I am with CMG Home Loans. We're the fifth largest lender in the country, but we're the first largest non-bank privately held mortgage company in the country. We have over 1,000 products and programs, and you alluded to the all-in-one. The all-in-one just allowed me to I wear the all-in-one hat, and the benefits that it does on wealth building really changed the trajectory of my career and even my enthusiasm in the industry, tough industry to keep enthused.
I can imagine mortgages aren't the most exciting thing in the world to work on. It's definitely not a conversation starter at a bar in most situations, but how did you kind of get into the mortgage world? So you were in banking and you decided, hey, one day I don't like dealing with money. I'm going to deal with people instead. How did that work?
Well, about 27 years ago, I bumped into a friend I was just buying my first home, actually. He wasn't the mortgage lender, but thought I'd be great in the sales part of it, educated me a little bit on it, and I just fell into a little brokerage shop and kind of was there just digging through files, making the cold calls, so on and so forth. And once I started getting into the finances behind it, and like I said at the time, buying my first home, I just fell in love with it. And it was much funner then than it is now, to be honest with you. It's changed a lot, as we all
a lot of regulations nowadays, huh?
Yeah, after the 2008 debacle. But, we've made it through there. A lot of people didn't make it through that. So I'm happy to be here.
That's awesome. And, through all of that, what's kept you in the mortgage world then? So, you said 6 years in banking, and now you're doing all this. What's kept you in this sector? I
would have to say what's really kept me in this sector, I felt like I almost started over again after leaving the bank, because everybody knew me as Frank SunTrust or now Truist. That changed. That was harder for me than I thought it would be. I probably could have been like many others and just got out. But I like to be in control of my own livelihood, meaning your hours, your grind. But really what's kept me there and reignited the passion would be what CMG holds for us. I feel like we're back to a, old school banking world, even though we're a $30+ billion company. It's family oriented. The CEO, who's the only shareholder of the company, Chris George, fantastic guy, fantastic leader. So I think that reignited the blood flow for me, but really behind it is what Chris created 20 years ago, the all-in-one loan. That got my blood flowing again, because now I'm truly helping people more so than I've ever done in my mortgage.
Interesting. And I guess through your career, from banking to mortgages, what attracted you to CMG? Was it the loan types they had? Was it the CEO, the fire they provided for you? What has kind of got you to CMG?
That's a great question. When I left SunTrust, I went to Homebridge, which is a $7 billion company. Now, ironically, the two owners, Chris George and the owner of Homebridge, CMG bought Homebridge. So it's the only reason why I'm here. But unbeknownst to me, Homebridge was a great place. Obviously, Chris George saw the value of acquiring Homebridge. Hence, that's why I'm here. Kind of luck of the draw, to be honest with you.
I feel like that's how most amazing things typically happen in life. There, you can plan for whatever you want, but realistically, the things that really I feel like set us apart, that have changed lives, are happy accidents
Right?
most of the time. So now that you had this wonderful happy accident, how are things going in the market today? I know that's one big thing some of the listeners I'm sure are going to be asking about when they see the word mortgage. We hear 100 different things about the market. The market is terrible. The market is great. There's fire sales. It's bullish. It's bearish. Where's the market in your opinion now?
Well, the first thing that you hear all the time are rates, right? Rates are, high, which stagnates the market to an extent. When people have to purchase, they still have to purchase, but nobody's refinancing. We're not in a refinance market. But again, after wearing this hat over the last 15 months or so on the all-in-one product, I know I keep diverting to that, but that's where my passion is. I've created a refinance market with it. I would have never suspected that, but you're paying principal before interest. So your effective interest rate is not where your traditional rate is in the high sixes or low sevens. Traditionally, we always all get caught up when I ask you, Rudy, or anybody, what's the most important thing to you in a mortgage transaction? Everybody's going to say interest rate. Now with this product, I get to rebut that and say, what's more important to you, interest rate or the amount of interest dollars you're paying on your reduced payoff term on your mortgage? When you pay off your loan in 8 years and your effective interest rate is less than 1 or 2% factually because you're paying principal first, doesn't that kind of negate you paying everybody who refinanced during COVID, which was everybody? You have 26 years remaining on your mortgage, but are you happy paying 3% or 2.75% for the next 26 years? Or did you want to pay off your loan in 8 years based upon your current debit and income habits? You change nothing.
So what should these buyers be looking for? So if the rate isn't the most important thing, realistically, what should people be looking for when they enter the mortgage market, whether it be first home, they're step-up buyers, if they're retirees, and they're looking to keep the money in their pocket and obtain a mortgage? What are some things they should be looking for that maybe people don't know?
Well, I think traditionally speaking, you still have to look at rate. Of course, costs, they go hand in hand. You can always get a lower rate traditionally by paying more costs. I mean, it's a double-edged sword there. So traditionally speaking, of course, you still have to look at rate. But again, I feel like we flipped the script on this product we've had for 20 years because it negates interest rate because you're not paying the interest up front. I mean, I don't know if you know this, but a traditional mortgage, on your 30-year mortgage, you're paying pretty much interest for the first 21 to 22 years. You're paying interest up front. And your payment never changes because you're paying interest based upon your start loan balance. If you had $1 million loan balance and you're 8 years in, you're still paying interest on that start balance at your 3% interest rate for 30 years. That's all we know. That's what we've known for 93 years in the traditional banking world. One more point is, for 93 years after the Great Depression, 30-year fixed mortgages were put in place. Why? To create home ownership. Makes sense. But since that 93 years, what has evolved? The consumer. But have the mortgages? No, they have not.
And why do you think that is? So why do you think that the mortgage industry hasn't changed? Is because no one has a choice and you need to buy a house, or you need to have someone to be able to loan you this money, because most of us don't have the opportunity to, drop, $500,000, which I think that's the average selling price right now in the US, around that. Why hasn't it changed?
Well, it hasn't changed because who's lending you the money? The banking institution. So if the banking institutions, it's all we know in this country. Not all countries bank like we do. Actually, they don't mortgage bank like we do. Think about it. Why hasn't it changed? What happens to your paycheck? Where does your paycheck go, Rudy, when you're paid on the first of the month? Where does that paycheck go?
Goes to the bank.
Goes to the bank. Your checking and savings account. What are they giving you on that?
$1 on the 10.
They're giving you nothing. So they're holding your money. What are they doing with your money? Rhetorical question. They're lending it back out to you and everybody else because they're collectively holding a million other clients. They're holding their paychecks until, call it your idle cash, until your money is needed to pay your bills, to pay your car payment. What else are they doing? They're holding your escrows. Why do they hold your escrows? Honestly, I was always taught in the industry, they're holding our escrows, our principal, interest, taxes, and insurance. I already told you that most of your payment is interest up front. We all know that. Why are they holding our escrows? Is it truly because They want to make sure we can pay our taxes. So they take 1/12 of our annual taxes and hazard insurance. You're the insurance guy. I mean, do we need them to hold our money, which in Florida and other places are big numbers in tax states or insurance states? You know better than anybody. You're the insurance expert for sure. Well known in the town. I mean, with that being said, they're holding our checking savings, they're holding our escrows, so they can pay it for us at the end of the year times 1,000,000 customers. They're holding our money again. They're not giving us anything on it. And then the third piece is, when is our mortgage payment due? It's on the 1st of the month. They don't care if we pay it on the 2nd, the 5th, the 31st, as long as we pay it before the 15th or the 16th of that month. Your payment's always the same, consisting of principal, interest, taxes, and insurance. They're front loading our interest, they're holding our money in our checking and savings, and they're holding our escrows. That's 3 pieces that they have on our money times all of their customers. They're making money on our money. That's why the banking industry would not take a proprietary product that we have, that, by the way, has federal private label securitization with the product, so it's federally approved. And we have a proprietary product we created 20 years ago, and we did over $1.04 billion in that product last year. Why? Because we're helping consumers, truly helping consumers build wealth through their mortgages.
So what's the best choice? Like you talked about, somebody, we'll call it like myself, who refinanced during, COVID, we'll call it, during those darker times where we were all dealing with the virus. So what are your recommendations for, both people who are currently, in a situation where they may have a lower interest rate, 2.5% to 3.5%, and what's your recommendation on new home buyers? What should they be doing? What is somebody's best option to not pay that interest for the next 21 years?
Well, on a new home buyer, I would simply do the same thing I would do on a refinance, but we'll get back to your question and I'll explain the latter part, is I would ask them their normal pre-approval questions. And what I would do is I would give them a traditional option. We do 1,000 products and programs. I still do all your traditional, non-traditional. I'm still a lender. This is just a product that, as I told you, re-put the blood going back into my system because I'm helping people, helping consumers. So back to that, I would put in a 30-year fixed mortgage at whatever today's rates are. And then I would compare it side by side. We have a simulator that shows them the all-in-one loan. So it's not Frank telling them, it's not Frank selling them, it's Frank educating them. Oftentimes, majority of the times, I get their financial advisor and or their CPAs on the phone too, to make sure we're doing the best for the client. Who is this product for? It's for people that handle their finances in a responsible manner. Who is it not for? It's not for people that are living paycheck to paycheck and not sure how they're going to pay their next bill. I would discuss a first-time home buyer, let's say, who fit into the all-in-one as well. But if they didn't, and they didn't have a good grasp on their finances, I would look into an FHA loan or a regular Fannie Mae loan. But I'll let the numbers tell us between the simulator on the traditional and non-traditional. One more point to the latter on the refinance side of it. By the way, we do purchases, refis, as you and I have already discussed, second homes, investment properties. We do all the products or all the home types. But back to the refinance data report that I pulled up with the Census Bureau is we're all stuck on interest rate, right? What's the most important thing to you historically? Repeating myself is rate. But when I ask these consumers traditionally, in a refinance market that I didn't plan to create, I'm doing refi after refi, along with the purchases, of course. People have to purchase homes. But why would somebody ever get off 2 3/4 30-year fixed? I mean, I already answered part of that, but when I dig further, according to the Census data, Census Bureau, the average homeowner has the lowest rate in the history of the country. They all have the most equity they've ever had in their homes in the history of the market. However, they have the most consumer debt they've ever had in the history of this country. The average homeowner has most consumer debt. The average homeowner has greater than $100,000 consumer debt.
Why do you think that is? So with that, like, what do you think has caused that to happen? So cash poor, but so equitably.
Their equity's stuck in their property. So what do? They have to go apply for a traditional home equity line, which front loads interest. It's a second lien. You're starting the process over again. Or even though they have 2 3/4, what will they eventually have to do? Cash out refinance. Banks love it because you're starting it all over again. Front loaded interest, 30-year fixed mortgage. 15-year, whatever you do, doesn't matter. It's still front loaded. So to me, I feel like we provide a solution. Their effective interest rate is historically less than their 2.75% that they're currently fixed for the next 26 years. But when you really look at their consumer debt, Rudy, what do you get? You get 2.75%, $500,000 loan balance with 26 years remaining. But then you have 2 car payments, you have 3 credit cards, and maybe you have a line of credit. Isn't your blended interest rate far greater than 2.75%?
So why don't more people know about it? If this is such a product that, again, that is groundbreaking in the sense of, we've been doing the same thing for 100 years. I never knew about it until I met you, of course.
Right.
And
Myself included.
Is this the big banks just saying, hey, we don't want people to know about this option because it goes against the traditional grain? Is that
it goes against traditional? What do banks do? They want to refinance you. I made a good living off refinancing Rudy, so to speak, but for that 12-year period as rates kept declining. And then what did you do again during COVID? Refinance again. I could have refinanced your house in the last 15 years, maybe 6 times. So what did the bank do? You got to start the amortization all over again. But what do traditionally banks do anyway? They're selling the loans on the secondary market anyway. This is our product. So back to your question, why isn't it mainstream? Well, 2 years ago, we did $780 million in this product. Last year, we did $1.04 billion. Last year, I alone did a handful of these. This year, I've already done 5 times that. So you can see what the numbers are going to do or doing. I'm just giving you my example, but as a company. So all we're out there doing, especially somebody like myself, and that's the all-in-one hat that I kind of wear, so to speak, I am educating the masses. I'm going after the Rudies of the world who have a book of business, the CPAs who have 500 clients, the financial advisors who have a book of business. What do I get to do on this product for financial advisors? Well, their clients in Florida, let's use that for an example. Oftentimes I have agents that say 85% of their clients buy cash. That could be a $1, $2, $3, $4 million property. I have a solution for them. Do the all-in-one mortgage, put your financial advisor on the phone. How about on a $4 million mortgage, or let's say a $1 million mortgage? Instead of buying it cash or putting 50% down, put 20% down. Save your cash. I'm sure your financial advisor can make you better than the interest you'd be paying on an all-in-one principal first mortgage. If at any time that client decided they didn't like the trajectory of the market or did not want to invest their money anymore, all they need to do is sweep their money through. They could pay off their mortgage and still have 0 balance, 0 interest due, own it free and clear, but still have access to that start loan amount of $800,000 for 30 years. It's their cash equity. Have you ever heard anybody say that you have cash equity ever in the mortgage industry?
No, and that's why for me, I look at this and I say, wow, the differentiator is so vast for a product like this. I'm not sure why more Americans wouldn't be picking this option. Like you said, the rising taxes. I mean, I'm north of $8,000 here in Florida in taxes for insurance. It's almost the same thing. So when you're in a situation where your mortgage payment is so dictated by not just the actual product you purchased, but all the ancillary pieces that go to that product on a monthly basis, I don't see how people aren't looking at this as a win or aren't looking at it at least as an option to say, hey, this must be or could be a better solution for me.
Well, and back to your initial question and what you don't see why they don't. It's because people are historically afraid to buck what they don't know, right? For 93 years, we're kind of brainwashed. I mean, the banks own us. The lending institution owns us. I'm sure my company and Chris George spent a ton of money proprietizing this product. You don't just go proprietize a mortgage product. You have to have vast federal approval to do so, I'm pretty sure. And again, why don't the masses, we did 1.04 billion, but in the trillions of dollars of mortgages that are done in the country, it's probably a very small piece. We're a $30 billion company. It's only about 15% of our company, but I see it because I'm living proof of it. I have two of them on my investment properties. I'm going to let my tenants pay off the investment properties. I have many videos that explain the process. It's a call that you really have to get on, and you have to compare traditional versus non-traditional and see what makes sense for you. Do you want to pay interest for the next 26 or 30 years on a purchase? That's 30 years. Or do you want to pay off your home in an average of 8 years and have 100% cash equity? How about paying your kids' college through your cash equity? Let me make one more point on the taxes. We don't escrow your taxes and insurance. In your example, you used probably 16,000, 8 for taxes, 8 for insurance. So what does that mean? You get more of your money every month that comes to Rudy paying principal first. Okay, Frank, I still have to pay my taxes and insurance at some point. You're correct. But when you look at your traditional mortgage after 1 year and you've only paid it down about 4 grand, call it 6,000. But based upon your debit and income habits on the all-in-one, you've paid it down $60,000 because you're not paying the interest up front. You're paying the principal. How do you pay your taxes and insurance? When it's due, you don't pay it ahead of the time. You pay it on the day it's due, and you wire it or auto debit it right out of your cash equity of that $60,000. You're still paying your taxes and insurance, but you're getting more of your money up front every month instead of somebody else holding it. Same thing as your paychecks. You're holding your own money by reducing your principal first. And it is your money 24 hours a day. ATM, wiring, banking. You control your mortgage banking. You change none of your debit and income habits. That takes education, Rudy. It does. People have to see it on a Zoom call. I'm on 3 or 4 of these Zoom calls every day.
I can imagine you have to really show this to somebody. I think it's very difficult for anybody to comprehend kind of how this
Agreed.
all works. Again, and it's not because, it's not that it's difficult to understand. I think
Correct.
it's just like you said, bucking the norms is part of the problem and saying, well, I'm used to fixed rate. What's the nightly interest stuff? What is this? It sounds so different to people because they just have never heard of these we'll call it buzzwords or ways to solve a problem that we all as Americans have to deal with, which is not all of us can just drop again half a
Well,
million or
let's
more
call it,
on property.
let's be frank about it. No pun intended. It sounds too good to be true. And what I do on my calls is I have all the rebuttal questions. And again, I have to remind you, it's proprietary and we have federal private label securitization to securitize the product. It can't be too good to be true. But I have all those questions. And I tell the consumer on the calls, by now you should be asking me these questions. How do you benefit? Why would you do this? But anyway.
No, that makes sense. So again, so we have these people are coming up to you, having these conversations and finding better options because you're looking for people first. So take off the mortgage hat for a second. So what do you do that has made Frank care about people first? What has put you on that path? Usually banking, numbers, finance. Most people don't think of insurance. They don't think of us as people who want to help others. They think of it as, oh, we're here for a sale. We're here for making a dollar. Why or who is Frank that's created this all-in-one persona, the guy we all know as the guy who can help reduce your rates and put you in a better situation. Where did it all start?
Well, I always felt like I was helping people, but it did feel like a chore. It did. And with this product, you still have to traditionally qualify. There's no free lunch. I mean, we've never had a clawback in this or a short sale or a foreclosure in this product in 20 years. Hard to believe. But why? Because it's always reducing the consumer debt. If that means it's reducing their debt because they're reducing their principal and their payment decreases every month based upon their reduced principal. But for me, it changed for me. I feel now that I'm truly, truly helping people. So for when did it change? I believe it changed with the all-in-one. I felt like I was helping people traditionally, like I would love to say most lenders probably are. But it did become a chore and a job. It was alone, alone, alone. Now it's exciting. It's not a sale for me. It's an educational phone call. I get to educate and I get to ask Rudy or any client, who do you know? What CPAs that you're getting business from or not? Or financial advisors. Let me help them retain their wealth in their client's portfolio through this product. That has changed for me. I am truly helping people. When you look at the simulator, you are helping people not just pay off their mortgage, Rudy, at an effective interest rate less than whatever rate they have, which is hard to believe, historical lows and rates, right? But you're building them wealth through their mortgage that they never would have had an opportunity to do. Who loves that? The consumer But also, who else loves that? The financial advisor. I get to show them how to retain wealth in their clients' managed portfolio instead of putting it all in their mortgage, which they can never get it back. That's when the needle moved for me. I am helping people. Has it increased my business vertically? For sure. But it's fun. It's become fun.
That's awesome. And you need to love what you do. I think that's, again, I think you're passionate about it. It makes sense. If you don't love what you do, if you're not excited about the thing you get up every day and find opportunities for, then you're never going to, like you, appreciate the thing you're doing. And I think that's the one thing that, sets you apart from a lot of other mortgage people I know is a lot of them are just going through the boxes, checking the boxes, doing the thing that they're required to do because that's what they were told they have to do. And I think that's the misconception with, we'll call it the financial word in general, is don't look for people who are checking boxes. Look for people who are passionate about the thing they're doing and helping you. Helping you and being passionate are extremely important pieces.
And with those other lenders that you're alluding to, they're all doing the best they can do, as was I. I'm sure they have good faith. They mean well. They're grinding. It's a chore. It's a job. But I'm just blessed with, like you said, I kind of fell into an opportunity. We have 1,000 products and programs. Not every lender in our company of 1 or 2,000 people just like me wears this hat. I bet a small percentage do. I just chose to. It changed me in a stale business.
Now, is this product available only in Florida or is it across the country?
No, it's in all states. I mean, it's made me we're licensed in every state. It's a countrywide product.
Good, because that was the one question I think that people were going to wonder: is this special to Florida? And how long have you been down here? Anyway, I guess I never really
7 years.
7 years. Where were you originally?
Maryland. I'm a Maryland guy. A lot of my business is still Maryland. I have a lot of relationships there.
How did you? What made you make the transition from Maryland to Florida? Was it this opportunity, or was there something
No,
else?
a family and a child. Just kind of made the move.
That's awesome. Yeah, I was in the DMV for a while myself, and I miss it, but at the same time, I don't. Florida's Florida's been a great state. It's done right by me. It's done well by me. What in the future do you hope to see? Do you think there's going to be something else other than the all-in-one that's going to come out that's going to shake up the industry?
Well, I think we're going to add to it. Companies aren't going to proprietary. The difference between us are, besides a lot of things on engineering this product, is that being willing to take the finances. I'm sure there were endless money to create this, but lenders aren't going to do that. What do lenders do? They don't hold their money. They churn it. They hope you come back to them to refi. They either buy servicing on the secondary market, but they sell the paper. So when you refinance, you're already with somebody else anyway. We don't have that. It's our product, right? With our banking partners. But what happens here is when you ask what's coming down the line, big things. We just bought a bank. No lenders buy a bank. We're not a bank. We don't claim to be a bank, but our $30 billion company bought a bank. Why? Because I assume one of the main reasons amongst many our single shareholder, Chris George, genius. I mean, bought a bank. It's been approved. Should be in place by the end of the year, going into the new year. But what they're doing with the all-in-one alone is they're going to open this up to commercial lending as well. The all-in-one product. I'm a residential lender. I do have commercial brokers I can go to, not with the all-in-one, but the principal first. We were also increasing the loan amount. Florida, in certain pockets in Florida, initially we would go to 4 million. Now we'll go to 6 with our banking partners. But we'll be able to detail a product to maybe some of the Palm Beachers. You buy a $30 million property. Where are you getting your money from? You're buying it cash, but you're calling your financial advisor, going from a line of credit or from your business line of credit. I have a better solution for you. And that's the all-in-one. But on the commercial side, we're opening it up to commercial. I'm sure now on exception basis, we'll be able to do what we think makes sense in our portfolio without pulling any risk for us. Remember, we've never had a short sale or a clawback in this product. We don't intend to start. But by them buying a bank, I think it's pulling things in a massively different direction. And they're on the cusp of engineering some other products that are on the forefront of lending ahead that nobody else has. What they are, I don't know. But we did have our powwow in January, and they were talking.
That's amazing. It's good to hear, though, that their lenders are doing things differently, right? We are so used to things being stuck in the mud. I mean, I remember it being like Uber and Lyft, right? From having taxis. I mean, again, something that totally changed the market. It sounds like this is going to do the same thing as people continue to learn more about it. And it sounds like they're not stopping there, which is exciting.
Yeah.
I'm sure it's exciting for you to know that you are released with an organization who's doing something more than just sitting down and accepting the traditional norms.
For sure. I feel like I'm just scratching the surface on the all in one. I mean, things like this, and thank you again for having me as your guest today. You do a great job here. But for me, my videos, I think I created 30 1-minute videos on questions, rebuttal questions, doing podcasts. I have a CPA who has a book of business of 600 people. You and I will discuss him on a business, conversation. At some point in time, I will connect you with him. He's a game changer. He's very entrepreneurial, and at the forefront of his 600 clients is my all-in-one. I didn't ask him to do that, but he sees the value. So it's a matter of, even when we do come out with those other products, it's still not mainstream. We have to be out educating like you and I are doing today.
So we'll call it, yes, you do work for an organization, but you really own your book, right? You
Yeah,
own what you do. You're not being fed every single day saying, "Hey, here you go. Here's 25 opportunities. Frank, good luck. Go have fun." You're building a brand. You're building a business, the Frank business. So
absolutely.
over the last couple of years, obviously after COVID, during the COVID times, but afterwards, things change. Networking, business relationships have changed. We do this a lot more. This is much more normal nowadays than it was many, many moons ago. So what are you doing as, we'll call it, your own business entity, to be able to network and get out there? What do you do? What can you tell, these younger mortgage entrepreneurs who are going out there to start their own opportunities? Like, what can you tell them? What are some of the hit lists for you that help you be some more
Well,
successful?
Well, for starters, that's a great question, but I have to do the exact same thing they do. I'm not over and above any of that. I have to pick up the phone, whether I feel like it or not, and I have to call these agents. I have to call these financial advisors. I have to call these CPAs. I have to go to the network functions. I have to follow up. I have to do the exact legwork, phone calls, phone calls that they're going to have to do. I mean, why do 5% of it's probably any industry, but why do 5% of the agents or mortgage lenders make 95% of the money? It's because they're going to do the intangibles that we all have to do. You can't stop. I mean, I do have a coach that keeps you accountable, but still, I don't have to do it. So that's my advice, is to do exactly what I just said. There's no secret sauce. But for me, when I'm making those calls, I truly feel now that I have value to bring to them. Frank, I have my lenders. I have my people I've had for 27 years. That's great. I respect your loyalty to your lenders. I hope my agents say the same about me. However, let me show you how I can help your pipeline and bring your referral sources from CPAs and financial advisors just through a proprietary principal first product.
So essentially, your mindset is you still have to make those calls. There is no replacement. There is no substitution for just good old fashioned hard work.
I
All the
haven't
all
found it yet.
I'm looking for it. So if I find it, I'll let you know.
Please.
But there's no substitution. You still have to grind. The only difference is that the product you have is at least something that can help you. And similar for me, right? Like you talked about the insurance agency, right? I'm not a captive agent. I mean, I work for one agency. I don't have to sit here and hope that I can find you opportunity in one single product. I have multiple products. And like you said, having over 1,000 different hats, you're able to provide people with different options, which again, options are the key. If you don't have options, what do you really have? So at the end of the day, having all these options, you become a resource for businesses, business owners, organizations, entrepreneurs. And I think it's amazing that you've been able to, over the last couple of years, take this product and convert it into something that's really helped you provide assistance to people, help themselves, right? So what is Frank's big goal? What are you looking for? Is there, like, when you sat down in the morning, you're sitting there, you're drinking your cappuccino in the morning, because I think you're a cappuccino guy, I'm just assuming, but I'm an espresso guy, but let's say cappuccino guy, you're sitting there with a cappuccino and you're saying, hey, today I'm going to find success. How do you do that? But you already know what keeps you going. It's the all-in-one, it's the extra products, it's a great CEO, it's a great team, it sounds like. But in the morning when you first wake up, how does that look for you versus what it would?
For me, it looks like, who can I dig deep with today? I mean, who can I dig deep? If it's the employed guy, and we're looking at a traditional loan or a bank statement loan because maybe he doesn't show his income on his tax returns, that I got referral from the CPA. It's, how can I dig deep through this gentleman and his employees, let's say? This is the way my mind thinks. Okay, you have 80 employees. Let me help you achieve your mortgage goals and hopefully wealth building. But after that, let's Rudy and I connect, or let's the agent and I connect, real estate agent. We'll put together something and approach your human resources. How can we bring value to your company in your name? Like basically John Smith is looking out for his employees with this credit towards their refinance or purchase, offered by John Smith, really offered by CMG and Frank Trimboli, but just getting in front of them. I enjoy being in front of, really, it's beneficial for me on getting in front of the people that I'm helping with the books of business, but obviously it helps bring your business vertical, but you're really helping people. So when I get up in the morning, it's like, who can I help today? And really the all-in-one, even though that may not be your end product, maybe you didn't show your income on your tax returns and you don't traditionally qualify. Maybe I'll put you on a bank statement loan where I don't have to show your tax returns. But most of the times on those savvy people, I get to talk to them about the all-in-one. I put them on the bank statement. Maybe that's at a higher interest rate. Well, we got them in their purchase. And then within a year or two, I said, let's look at your tax returns or your assets in 6 months or a year, and we'll put you on the all-in-one. You'll pay it off in 5 years. So really, you would have been on your mortgage 1 year on the bank statement, 5 years on the all-in-one. You paid it off in 6 years instead of 30 years. That brings me, it brings me satisfaction, I guess I could say.
Yeah, well, I can imagine. I mean, you're again changing people's lives. I mean, having a mortgage for 30 years sounds terrible. I mean, we're all been doing it for the last, like you said, 100 years, but it's refreshing to hear it. And I think that's one thing, I hope people take away from this when they watch or listen, is that there are people out there who do want to help you. You just need to find the right people, and it's working with those people who are going to make you successful. It doesn't, it takes a village, right? It's not, I always say, like, my agency, there is no one person who creates success, right? We all create success. And it sounds like that's a similar mantra that you live by is, you're working hard, you're out there making it happen, but you're putting the client or the customer first with them in mind as your success being only if they are successful. And
Yeah.
it's a great mentality to have.
And just to tee off that is, in retrospect, financially, it doesn't matter to me whether you do a bank statement loan, a Fannie Mae loan, an FHA loan, a jumbo loan, or an all-in-one. I can do all of them. But I would be negligent if you were that client that fit into that, handle their finances in a responsible manner and do it well. I would be negligent if I didn't or the two.
Yeah.
I just would be. And it's interesting when I put these people on the all-in-ones, the average homeowner, it's pretty easy asking for referrals. Hey, do you know of any CPAs out there? Do you know of any financial advisors out there? Or do you know of any people in your sphere that I could help, whether they're on 2 3/4, 30-year fix for the next 26 years or not? Could you tee that up? The answer is usually yes, especially after they're living it. And several people just in networking groups that we're both a part of. They were skeptical at first. They're on it. They're calling me back 4 months later saying, this is mind blowing. I'm going to pay off my mortgage in 3 years. So nobody better than testimonials from people like that for me. And I think these people are so appreciative that I have asked them to talk to the skeptical client. Hey, could I talk there's tons of testimonials on the website, so on and so forth. But sometimes people want that voice on a real live person that I put Rudy in the product. I would like to talk to Rudy. No problem. It's fun. It makes it.
So while you're having all this fun, how did you, from the banking industry to mortgage, because I think we haven't really gotten that deep into it, how did you end up building this book? How did you change that mindset and decide to say, hey, I'm going to get involved and I'm going to make this happen?
Well, the reason why I was in banking was from mortgages. I was never in banking first. I went straight into mortgage banking with the bank, SunTrust, like I said. Building the book was just out there handing your card out, just doing the same stuff everybody does for 20 years. That gets a little old after a while and you kind of stop. But when I did leave the bank, full transparency is I left a lot on the line. I mean, I left a lot to go. I didn't realize how much I left because it was easier for me, especially it would have been during COVID times. Everybody would have been calling me because I did their mortgage 3, 4, 5 times. Well, all they know is the bank, right? Back to traditional, all we know for 93 years. So I did leave a lot on the table financially, business-wise, but I guess I had to take 5 steps back to move forward and go vertical. And again, luck of the draw, third time we're talking about this. I fell into CMG, Chris George, our leadership, the management, we're all a family, and this product. And it only seems to be getting better. You just spent a ton of money buying a bank.
But yeah, well, you don't do that because things are going bad, right? You do that because there's some opportunity that you're looking to find in the ether and build upon,
Well, and
right?
I have looked at, and we acquire, I've looked at the stats while over the last several years since COVID, while other mortgage companies were either out of business and or they're down 40% or banks are down 30% because the mortgage piece of the bank, remember the bank's the whole structure. They're not really mortgage lenders. That's just a small piece, right? A bank. We were vertical, literally. Anybody can look it up. Why? Because of CMG, which I would say Chris George. You know, at the end of the day, I mentioned his name a lot, but very impressive. After 27 years, you're home, pretty much. I get to help you, or at least educate you.
Well, education is everything. I think that's part of what people are looking for now out there when they look online, right? Traditional media sense is kind of gone in today's world. Everybody absorbs the information differently, but they're absorbing it all through the internet now. And they're taking time to find people who are authentic like yourself to be able to learn more about specific topics, especially this one where, like you said, 93 years, 100 years, we have not had any new changes in the industry.
Are you helping the consumer? I mean, they talk about a 40-year mortgage. Are you kidding me? Nobody's ever going to build wealth.
Yeah. What? So why? So in your opinion, like why 40-year mortgage? Like I've been hearing 84-month terms for vehicles now too, right? It used to be 72, sounded crazy. It used to be get a 36-month loan for an automobile. Now it's up to 84. Same thing with, like I said, with mortgages, 40 years. Like what's the reason behind it?
Well, the reason behind it is per what I said before in the Consensus Bureau. The average homeowner, I don't need to name the other pieces, but they have greater than $100,000 consumer debt. They can't afford their debt. So if you can't afford your debt, your credit card, and your home equity line, so on and so forth, you have no equity. You have equity in your property, the most equity you've ever had in the history of the market. I know I'm being repetitive, but you have zero access to it traditionally. The bank's going to own you again. I got to go get a home equity line of credit to try to pay off my credit cards. No, I have a solution for you. So that's why people can't afford their debt. They can't. They're going more and more and more in debt. So why would you create a 40-year or an 84-month car loan? Because you need your payments $100 less, or on a mortgage $200 less. The banks love you. They own you. Now you're going to pay it off in 40 years instead of 8. You're never going to pay off your house. And what are you going to do, Rudy? Rates are 7%. Just use that number. 6 3/4, 7%, whatever they may be. What are you going to do every time it goes down 0.5%? You're going to call your bank. You're going to refinance. What does that mean? You got to pay costs to refinance. You're starting your term all over again to save a couple $100. Now, when it goes down from 6 3/4, from 7, or it goes down to 6 1/4, you're going to do it again. If it ever goes down to 5 3/4, you're going to do it again. I have a solution for it. The all-in-one, you never need to refinance. Why? Because you always get the benefit of the constantly reducing rate while your principal is always reducing, your payment's always reducing. You don't need to refinance ever, and you still have 100% cash equity to the equity in your property. Educate, educate, educate. Nobody would do a traditional mortgage if they fell into, I handle my finances in a responsible manner. I have the solution for them, period. If not, they're just going to chase the traditional market. I've done it my whole life, so have you.
Yeah, pretty much. Yeah. So what can people expect with these changes in the market? Do you think that we're going to find more options like this out there, or because of the proprietariness of it, do you think it's just going to stay the way it is? I know you talked about the reason why it is the way it is, but do you think there's any opportunity for the mainstream to pick this up, or do you think they're just going to keep pushing it back?
No, I mean, it would go back to an example. Why doesn't Ford create the equivalent of the Tesla Model Y? They could, a proprietary car, or why doesn't another car manufacturer create the equivalent of Porsche 911 Carrera? It's because they don't have the engineering capability, the financial structure to do it, to navigate through the changing, ever-changing market conditions, and simply they don't have a proprietary product. They don't have private label securitization on any of their products. They're a lender that churns and burns everybody. That's the way the industry works. You sell your loans to Fannie Freddie. You go on to the next one. You go on to the next one. We get to retain our client. They never need to refinance. They can always get cash equity 24 hours a day out of their equity in their property, just like their savings and checking account, reverting back to the earlier conversation. So will they do it? No, they won't. Are they going to go spend hundreds of millions or whatever it costs to proprietize and have federal private label securitization on a product? No. If so, everybody would create
Their
Tesla.
own version.
Tesla. I mean, they would, but that's not what they're in it for. They don't think ahead enough to say true examples. Even though I'm doing a mortgage when I was at the traditional bank and the rates go lower and lower, don't I have to fight over that mortgage every time because they're getting quotes with the internet every day? They're still getting quotes. It doesn't mean they're coming back to me. Hopefully they are. But now me, I'm still in the traditional banking world. Again, what's more important to you traditionally in a mortgage transaction? Interest rate. So if somebody comes in and is an eighth or a quarter better than you, my bank, my company loses that loan anyway. So back to CMG, engineering this product, you never lose that consumer. Why? Because they paid off their mortgage. What are they typically going to do with that cash equity? They could do nothing and pay zero interest. Or get on the phone with their financial advisor, go use the money. Yes, we make interest on it while you use it, but we make like 1/7 of what a traditional bank would make. And you're never going to go anywhere else. Never. Do we get the fees of you refinancing over and over again because you don't need to? No. But is that truly looking out for the consumer? No. Are we looking out for the consumer with this product, helping them build wealth? They never have to refinance. They never have to go anywhere else. Sounds like it to me.
Well, I think it's compelling. I think that if people aren't aware of it, I'm sure that in the next week or so, once this drops, they're going to be aware of it. And I'm excited. I hope that people look at this as an option and an opportunity. And that's my hope. Having you on today was, providing people with options. That's what's out there. There are options. There are better things out there. And one question, Frank, I like to ask all of the people. If you could speak to one person and ask them one question, it doesn't matter who it is in the world, dead or alive, who would that person be, and what would that question be that you would ask them?
I guess it would be to my father who passed away. I've never been asked that question. It's just a tough one. To my father who passed away 9 years ago, I think about him every day. I'd like to think I'm a lot like him. I would have to ask, amongst my own not so great decisions in life, being human, Dad, am I doing okay? Are you proud of me? Can I hold down the legacy? Am I doing, looking ahead? Do you see me holding down that legacy and doing right by you?
Well,
I guess that's it.
I think you are. I think, I don't know him and did not know him. Obviously, sorry for your loss, of course. But I would say with your passion, the tenacity, and what you're doing now, trying to help people, trying to give them an option, because that's all we need in this life, right? Just options. I think that you are. And it's exciting to see somebody who, again, is passionate about something, who's got their nose to the grind. There's a lot of entrepreneurs out there who say they want to be entrepreneurs, who want to work hard, who want to be their own boss. But it's a whole nother thing to live it, to make the phone calls, to work hard, to be up late. And I'm excited to have had you on here. And I'm hoping that people see that that's who you are. That's who we bring to these podcasts, because you are moving from that ladder to a legacy, and it's exciting to see it.
I appreciate you, Rudy. You do a great job with this, man. And you're, I see you out there with the grind yourself. And for you to put this together for your business, for your clients, for your, affiliates, I'm sure we all appreciate it. But I can only speak for myself. I greatly appreciate it. And I know good things lie ahead for both of us and for our clients.
Oh, most definitely. Now, Frank, I got to ask one of the most important questions. How do people find you? Because I'm going to tag you on some stuff, but, is it Instagram? Is it a phone number? Put the plug in. How do we get to you?
Trimboli, Trimboli at CMG Home Loans, but mainly my phone number, 240-401-1333. I'm always available. Let me help you, educate you on how to pay off your mortgage principal first by changing nothing.
Well, Frank, I appreciate the time, buddy. Thank you for coming on and educating the customers, the clients, family, friends, everybody who hopefully takes the time to spend here and learn more about what you've done, what you do, and what products you have.
Appreciate you, Rudy. Have a great day. Happy 4th of July weekend to you, my brother.
You too, buddy.
All right, take care.